Hey, welcome back to the channel. It's me, James RULEXRP. I'm not a financial advisor. This is for entertainment purposes only. And we're going to get straight to it. Cointelegraph.com. This article just came out today. I'll leave a link in the description below. Why Grayscale's new digital currency ad could bring crypto investing to millions. Just as Merrill Lynch's 1948 New York Times ad introduced boomers to stocks, Grayscale's cable news ad blitz suggests the time is right for digital currency. This was written by Andrew Thurman, and it is an excellent explanation of both. And I'm going to read it word for word. Bear with me. If I bore you, check out some of my other videos, but we're going to cover this because I think it is very important to see, and I think that you should tell your friends and family after reading this or after watching this. This morning, Grayscale, the world's largest provider of cryptocurrency investment vehicles, temporarily turned its attention away from hoovering up the supply of Bitcoin to focus on arguably the most intractable problem in all of crypto, getting your stubborn friends and family on board. Last Friday, Grayscale founder and CEO Barry Silbert teased a massive ad buy on Twitter with the intention to bring crypto to the masses. And this morning, he delivered with spots on CNBC, MSNBC, Fox, and Fox Business, among others. The Grayscale blog, meanwhile, pitched the ad titled The History of Money as a wake-up call that people everywhere should seize what we feel is a once-in-a-generation opportunity that digital currencies may present. I'm going to play this. I do not have my internal recorder set up. I'm just going to play it, and hopefully you can hear it through the microphone. Let's do it. If I get this to start from the beginning.
Money, people traded goods, tools, cattle, grain, even shells represented value. Then currency came along. They made it out of copper, gold, silver, wampum. Soon people decided to put all that value into a piece of paper, then proceeded to wave goodbye to value, printing unlimited amounts of money as they passed the buck to the future. That's why it's time for digital currency. And your investment in the Grayscale Fund. Go digital. Go Grayscale. More money, people trade.
All right, there you go. That is the commercial that is being aired today across the nation. On paper, that sounds easy enough, but the practicalities are grimmer. Just about every crypto enthusiast is familiar with the scoffs, the furrowed brows, and the incredulous stares when discussing crypto with family members during the holidays. To be successful, this campaign would have to fundamentally recalibrate the average investor's opinion. Once that remains generally apprehensive on an asset class barely more than a decade old. Slowly at first, then all at once, the bankruptcy of denial. In some respects, the timing seems right. Powerful people are finally starting to get it. The market makers, from the purchase atop the economy, are now aping the same arguments that Bitcoin accolades have pounded into the table for years. It's a hedge against inflation, says Paul Tudor Jones. It's digital gold, echoes Tom Jessup. Consider the micro-history written in the forced smile of Jamie Dimon's face. In just a few months, his smug smirk when talking about Bitcoin evolved into mopey resignation. Cryptocurrency, he finally admitted, had a real use and a real future. But while the good folks down in lower Manhattan are coming around, the same cannot be said for Main Street investors, who have been fed a thin diet of skepticism on digital assets by financial gurus. Yet early harbingers of inflation are flashing warning signs. Corporatism prances naked and unshamed through the Capitol. A president is openly discussing defunding two of America's most heavily relied upon social safety nets, Medicare and Social Security. Central bank balance sheets collectively arc parabolic. Unemployment remains in the double digits. Macroeconomics conditions daily concoct new ways to demonstrate the need for cryptocurrency, and yet barely a quarter of Americans are inclined to buy Bitcoin. Thus, the space is left with a stubborn roadblock to mass adoption. Those populations which could most benefit from Bitcoin as it developed into a true store of value, the middle class savers and investors search for a bulwark against inflation and uncertainty, are among the least likely to understand cryptocurrency asset class, let alone how or where to buy it. In the general population, if the general population is going to benefit from buying crypto, they need to know what it is. If the Grayscale ad is going to achieve Silbert's stated goals, it will have to do more than advertise. It has to educate. That is the key. Educate, teaching the teachers, as I always say in my videos. The exceptionalism of contrarianism. I'm sorry, I'm Southeast Texas, and some of these words just tear me up. Though the task seems monumental, there is at least one successful historic precedent. Nearing the end of 1948, the United States grappled with similarly bleak conditions to those today. The post-war economy was caught in the grips of a recession, facing a stock and bond market starved of liquidity, and inflation and unemployment rates both nearing 10%. And with the Great Recession very much in living memory, few were willing to take risks with their money. Unfortunately, risk was exactly what the economy needed. Private investment from the middle class could have bolstered the nation's outlook and protected the wealth in countless families, but there weren't many transparent mainstream ways to individual investors to access stocks and bond markets. The SEC had formed just 15 years earlier in the excuse me. And the Roper Survey in 1939, best known today for tracking anti-Semitism in the mid-20th century, showed that the majority of Americans believed Wall Street was where cattle were traded, the New York Livestock Exchange. Few Americans even knew the difference between a stock and a bond. Enter Charlie Merrill. The legendary banker is credited for popularizing stock and bond investments at a time when they remained alien to most of the population. He started his career with contrarian bets, engineering the merger that created the Safeway line of chain stores, when conventional wisdom held that grocers were below the attention of Wall Street firms, and later most notably when he called for investors to sell stocks in 1929, citing the Federal Reserve, who warned that markets were growing exuberant. He almost famously sold all of his partners, Eddie Lynch's, stock while Lynch was away on vacation. Lynch remained understandably furious, right up to Black Monday. As World War II came to a close, Merrill eyed his greatest counter trade yet, recapitalizing a country starved of investment. He knew that Wall Street wouldn't be able to do it alone, and from his experience with the chain stores, he understood that middle-class America was a largely untapped source of economic might. However, there remained the question of how to attract a whole population to a foreign asset class at a time when individual investment participation sat in the low single-digit percentile. Merrill himself said of the task, "It was probably the biggest job of mass education that ever confronted any business at any time in the history of this country." 3 million responses. The tip of the spear for this educational effort was Merrill Lynch's 1948 ad in the New York Times, "What Everybody Ought to Know About the Stock and Bond Business," composed by Louis Engel. The ad is a genuine oddity in the history of advertising. The full-page 6,500-word spot, the longest word count for a newspaper advertisement ever, laid out with textbook simplicity the basics of the markets and only mentioned Merrill Lynch once. An invitation requests more information by phone or by mail in order to learn more. In addition to being strange, the ad was also a massive risk. A full-page ad in the Times cost $5,000 and roughly 2% of Merrill Lynch's entire ad budget in 1948. Luckily for Merrill and Engel, it was a success. The ad ran for months and eventually in condensed versions well into the 50s, collectively leading to over 3 million responses. In no small part due to Merrill Lynch's efforts, the number of individual investors in the United States nearly doubled between 1953 and 1959, rising from 6.5 to 12.5 million. For his part, Engel was offered a book deal from Little Brown and Company, eventually producing the seminal How to Buy Stocks, which ran through 8 editions and was most recently re-released in 1994. Today, the similarities between mid-century Merrill Lynch and Grayscale are easy to list. Silbert bet big on cryptocurrencies before they were popular, founding Grayscale in 2013 at a time when other institutions were reluctant to take the plunge. Grayscale has also made a point to lead the charge of the education front. Their 2019 Drop Gold campaign sought to teach investors about Bitcoin's superiority to gold as a hard asset, a campaign that still rankles noted gold bug and longtime crypto Twitter nemesis Peter Schiff. Wow. So as 1948 with the stocks and bonds, you're looking at 2020 with cryptocurrency to the masses. Let's take a look at the current cryptocurrency prices on coinpaprika.com. Bitcoin is currently at $11,829.90. Ethereum is $394.12. XRP is 29.3 cents. The total market cap, $367,907,000,000 total cryptocurrency. Follow me on Twitter at RULEXRP. I keep the XRP community updated with videos and blogs and posts on Twitter. And it is exciting to be here at this point in time. Do your own research. If you're new to the cryptocurrency community, share the news with friends and family and coworkers, because cryptocurrency is going to be the mainstream here in the near future. Have a great day. Take care of yourself, and we will see you soon.